All right. So this week, S&P 500 found support at the 50-day moving average. So volume failed to impress on indexes. This, coupled with a lack of actionable stocks, should give investors pause for thought. Okay, so let's jump to the index here. So basically, we are seeing some, support here. So this is the second time now. We are seeing like a little range bound here. So that's the short-term range. So finding support at 50-day, at least for S&P, that's a really good sign right here. Not sure, even here, like this bounce right here look almost identical, right, to Friday. In the previous week and this week, like almost identical, and then but it gives up pretty fast. So so that's something to pay attention. The other thing that you probably can see here, like you can see the volume is humongous on Tuesday to Thursday. So that could be also a bad sign, right? So the volume is, and then you can see Friday's volume is like much lower than the previous 3 days. So that's not a good sign either, The longer term trend is this black line here, which is the low range. So let me just delete this one. I'll make another one here. Just draw it further, because we might be stuck in this range, for a long time. Like we don't know, 3,800, and then at the top here is 4,200. So this is the current bigger, intermediate term range. So this has been going on since like last year, right, September, and then we bottomed in October, and then we have been stuck in this big range for a long time now. Like, if you count starting here, it's like November, now it's May, it's 6 months we've been stuck in this range. So there's David Ryan, he did a video with IBD, and he said that the conditions in terms of the market is very similar to the 70s, which is like almost like a stagflation kind of thing. Like right now we still have lots of growth. I think if we go look at the growth area, like on the Atlanta GDP, right here it says this came out on. Okay, so Monday will have another update, but the most recent update was May 4th, and you can see the current GDP for Q2. It's only been like 1 month, right? So since April, but it's going up. You can see that. So the growth is there. It isn't slowing down like everyone is saying. So that's very interesting, and that's the reason probably why market is holding. At least the index level is holding up much better. So we are near. You can see we are near the high of this range, but again, we have seen resistance. Like this one can't even touch that line. We came close to it, but it never get to 4,200. So it seems like there's a big sell at 4,200. Yeah, but right now we're stuck in a small range, and again, we all know what happened. The Fed didn't really help the market in any way. So with the interest rate rise, they basically now we're at 5%, and now next meeting the market is pricing in no rise in rates. So that could be a good thing if Fed can follow through with this, right? But Friday's job numbers now, I'm surprised this didn't move on Friday after the job numbers, because the job numbers was much stronger, and also wage growth was much stronger. So those are not good, right? For at least for the Fed, at least the wage growth is not good. So And then we're gonna have CPI data coming out on this Wednesday, so that'll be another really key indicator. If wage growth continue higher and CPI, at least on the service side, continue to go higher, then I mean the Fed's probably gonna raise rates again, like even though the market says not, and that could be the biggest disappointment on June, right? So we gotta be very cautious here, right? Because the Fed just, the economy is stronger than what the Fed wants. And, honestly, I don't even know why, but that's what's happening. It's been reluctant to go down as people want it to. And the Fed has been very, very consistent. The market, the market didn't tank this week as much. I thought it was going to tank even more, but we had Monday down, Tuesday sideways, Wednesday was the Fed day, it went down, Thursday was sideways, and then Friday we have this, kind of like a relief rally in my opinion. And so, again, one day bounce is really, after 4 days of like down and sideways motion, is really nothing to celebrate at all. So that's so I think like the market is just like I said, like David Ryan said, like I think we have to be very cautious where we buy. And this last many months, except for January, this run right here, except for that, even this run wasn't very this March to April run was very subtle, and it was mostly again led by big caps. But yeah, most of the time you are better off buying a pullbacks than breakouts. Because of the earnings lately, stocks are moving in very big movement, either up or down based on their earnings, and that also shows that market is reluctant to hold stocks at this moment because we see those big drops, right? So there's no, basically again, the market is at a point where things are very nervous now, right? Like we at the moment of truth. Are we gonna inflect soon in terms of what the Fed will do, or is this just gonna be another continued story? And this time the market is betting big. Like I said, this is actually very surprising to me that it didn't move much on Friday. The market is betting big the Fed are not going to raise rates again. And maybe the market is right, but but what I'm trying to say is don't be surprised if CPI and job numbers are just so strong that they have to raise rates. And also yesterday, the day before, I think May 4th, yeah, on Thursday, the Bank of Canada also announced they might raise rates again, right?
Yeah, they are changing from boss.
Yeah, so again, the inflation is not coming down as fast as people hope. It is still, look at this, it's still targeting 5% even now. That is just way above than what the Fed wants. And if it's not coming down, they're gonna keep raising rates. And so, as much as I want to believe the market is right this time, I don't know. We'll have to see. Like if it does, then what should happen is it should break out of this zone. Okay, it should break out 4,200 and above. Now, even if it does break out, many analysts, including the bulls, have been revising their range for the S&P for this year, and some like BMO, I believe they were like so bullish. It was 4,800 at the beginning of the year. Now they have revised down all the way to 4,300. So even the most bullish analysts are now is not as bullish anymore. And there's just too much things happening that is going to slow down the economy, and then on top of this Fed stuff that the Fed is trying to do. So I think I don't really like the recent trend, especially this week. Like we're seeing, like I said, many growth stocks breaking down. We are also seeing high volume distribution on the index level. There's always opportunities, even in a range-bound market. But the problem is, like I said, it's not going to be like breakout and just keep moving new highs, and pull back a little bit. No, it's going to be like, it's going to be very hard to catch even a good stock that runs up, because there's just going to be stronger pullbacks and so forth. And so you have to have the appetite to deal with those pullbacks, and have a bigger risk, right? Because you might have to keep your stop loss range bigger in order to even survive that pullback. So it's a very tough market. Very hard to make money right now, I find. I feel a little bit more laid back right now. I feel like I don't need to go into full position. If I do buy something, I'm just going to take a pilot position just to see where things are going, and if those stocks are going to be, especially after this earnings season. We are 2 weeks, 3 weeks now almost into it. So there's lots of stocks already reported, and there's some emerging stocks, and the leaders like the chip stocks have, except Nvidia, most of them have actually, in my opinion, like, I don't know, I feel like they haven't performed well lately. So that's as a group, as a whole, right? Like, of course, like we know SMCI did well, but most of them just didn't do as well as people have hoped. And so that's a bad sign I also think that's a bad sign for the market, because if it was a bull market, I would think the chip stock would continue to lead, and they may come back to lead, but right now they're not. So so that's the sad part, and I'm trying to find leadership right now, and the only clear leadership I can see, again, we can pull it up, but I think it's health and commodity, like gold, not commodities in general, but just gold. So those are the two areas. There's also like home builders, but medical is doing really well right now. So those are the few areas that I see that still have lots of strength, but everything else is kind of like, there's some stocks in that group that does well, but then there's more stocks that actually doesn't do well. So it's a very hard market. It's a stock picking market, and even like I say, even if you pick the right stock, it's probably gonna be tough to hold because they're just very volatile. One stock that I was, many stocks got shaken out this week for me. Even I already sold quite a bit by Monday, but like even the ones that I'm still holding, like this guy, TGLS, Building Construction Products. Look at it. It announced earnings and it went up so high, and I'm not a day trader, so I don't sell on daily. But anyhow, it reversed all the way, and then I got shaken out. So there's so many. That's another big story. I found so many stocks reversed this week, even the ones that like pop up in the morning because of earnings, and that's a very negative sign to me. Now on Friday, you see what it did? It even climbed back above the 10-day, which forced me to put this back on my radar, because that's and like for me, there's a rule that I follow, which is anytime after a shakeout, and if after that shakeout it bounced back really quickly, usually I have to go back in. And because they already shaken out a lot of people, and the fact that it can still bounce back is a sign that that institutions want this stock. So, but again, this is the market we're in, very volatile. This is probably the biggest daily trading range since like the beginning of this run, and so I don't like that. So I don't, again. So I'm paying, like I say, I'm being very cautious. Even stocks like this, that show improvement after it fell, like I have to be very cautious. I'm not going to put full position in again, even if I do get back in. And it's just a the next thing you don't want to see is that it just start falling again, right? And then start building a big base here, and it could happen. So again, what I'm trying to say is there's two stories here that I see from stocks this week. So I'm not talking about the small trading range now. Now I'm talking about the whole movement. We have this stock, for example. I'm using this stock as a good example. This stock has been climbing, and it broke out. It was a leader, and even though it climbed slow, but it did climb, and you can see it obeyed the 50-day line really, really well, or the 10-week moving average. And so, if you were a holder of this, you have a pretty good gain now. And now, it could be the time to build the next base, and every stock eventually build the next base. So even if it's a leader, it will build the next base. So what happened is, these are the stronger stocks, and the stronger stocks, they have already been moving the last few months, and now they have gained usually over 20% or even more, and now maybe time for them to digest, right? And these are the ones that haven't fallen apart yet. So again, we have stocks that report, and we divide into two groups. We have the ones that continue to run, and the earnings came out well, and it pop up even higher, or you want to run a little bit more. And then you have the ones that are breaking down because their earnings are bad and they're breaking down hard. And those guys, and these are all strong stocks that I'm talking about, and they are going to form a base. So question is, will this one form a base, right? And I think most likely, there might be only a few usually that won't form a big base. Those are really super elite, and that's how you know those are elite. But most of them are going to fall and form a base. And so that's something I'm watching out for, and I don't like this pattern. Is very loose, right? Very loose lately. So that's another thing. Usually at the top, you start to see looser action, which is like bigger daily range and stuff like that. And you're also starting to see, like I say, high volume range. High volume, like usually is the biggest volume sell-off. In this case, I don't know if it is, probably not, but it's pretty close. This is 1.2. Okay, 856. So it's not the biggest daily range, but it is the biggest sell-off day since the beginning of the run. So, so like I say, I would be very aware. I'm using this, like I say, this is a very good example because this one hasn't fully broken down yet. You can see it's triple-digit growth, really high. Like I think even the quarter. I'm just gonna search in. Sorry, let me just pull it up. I'm just gonna download this file here so it's easier to search. I'm looking for the earnings, the next earnings report. So just let me download this. Yeah, any question on your side so far?
No, sounds good.
Yeah, yeah, so let me just pull this out quickly. I just want to make sure that the earnings are still good on this guy. And that's the thing, right? Like, no matter, like every stock will form a base eventually. Some may run a lot longer than others, but those are the elite ones, but most of them are going to have this problem. So we just have to be aware of when that's going to happen. So here's the estimate. So it's still pretty high. So 51%, yeah. So I mean anything over 50% are considered pretty good, especially if it's a big number, like a actual big earnings value. So for example, so here 69 cents, 50% would be $1.05. So that's kind of in line with recent growth, right? So this is 3 quarters in a row has gone, quite strong. So that's in line. And so yeah, but yeah, unfortunately, like I said, I was shaken out. And so now I'm like, because I have so many stocks shaken out, one of the things that I learned from Mark Minivini is always look at your recent trades. If, market always give you a hint, right, of what's happening. And so you just have to pay attention to what your portfolio is doing. And like I said, many of my stocks, was either shaken out last week or this week. And that's not a good sign. So I'm willing to like I said, be more cautious, take a smaller position, even if I do want to try something. Just because I think there's lots of uncertainty right now, and these stocks have run like many months now, so that's something again to be cautious because usually they will form another base, and this is clearly what you call stage 2, right? So this is like stage 1 right here, and then now we are going into stage 2, and stage 2 is the long-term run. And so this stock could run for a long time, but we just have to be, like I say, no matter how long it runs, like even let's say it run for the next 1.5 year, you're gonna see like a base somewhere, and that base could be 20-30% drop, and you don't want to be in it when it's doing that job, unless you have a very, very big cushion, right? So and so that's the thing, yeah. But this is definitely one of the leaders. It's on a stage 2 uptrend. I definitely will continue to look at these stocks, because they, like even this, you see in 2020 run, 21 run, look at that sharp run, right? It was at $5 and then it went up to 25, so like about 5 times. So this time we're at about 25. It could go as high as, I'm just using a basic number here, but who knows, right? It could go up to 100, 125. So if it has the same run, but obviously this is not a full-blown bull market, and that's why you can see it's much slower than it was here. So 25 to 45, so much slower, right? Than here to here. So yeah, but I think it's important to understand as a big picture where we are. And I think, I don't know who's right or wrong. I don't know if they're right, it's going to be right, whether we are stuck in a range bound until something big happen, which is, like say, unless either Fed cut rates or something, which they say is unlikely this year. I'm surprised the market didn't tank because of that news, actually.
Yeah.
So because the market is pricing in, that's why I'm more skeptical about the market right now. Because if the market is wrong, the market is going to tank a lot, because the market is pricing in no rate hikes in May and June, July, no rate hikes, and then September, yeah, and then September is going to start dropping, right? And that's why so November drop, yeah, December drop. So basically starting in September is supposed to drop. And who knows, it could happen maybe in the next, maybe the Fed, like I say, maybe CPI is going to drop more than expected. I have no idea. That's really going to be the key this Wednesday. But the fact that market didn't react big is a good sign. Okay, that's one good thing. But like I say, I'm seeing lots of mixed signals right now. Okay, I'm going to jump off topic off my script for a second, because I feel like this is important to talk about right now. So Marcus Smith, they did a video. They talk about the AAI, individual investor sentiment right now, and you can see it has, the red is the bearish, so 34%, 35%. So this is weekly, right? And then the most recent week, look how much it jumped. So there's lots of bears right now in the individual investor camp, and that's usually a contrarian indicator. Okay, so this is a good sign, right? Because there's way more bears, and so that's one thing. But let me jump to the one that I always look at, which is the CN Fear and Greed Index, and look at it right now. We are in greed level, so people are pretty greedy in general, at least based on this formula that they use. And we look at the timeline and look at it. It has, even though it has dropped, we're still in greed level. And this kind of follow like a little bit more like the index right now, which is we have this recent run, and then it fall back, but not much. So we can look at the index again. Go back to S&P. Okay. Yeah, you see it. We have this, it's probably more obvious on the weekly chart. So let me go back to the weekly chart. We have this like, nice run, and then it hasn't fall back much, right? So, so that's a good sign. That's the sign that it's good, okay? So like I say, I'm seeing like, different indicators showing different things right now, Okay, so that's the good thing. So let's jump to the next thing. Oops, where did it go? Here. Okay, this one I think is super important. Apple and Microsoft, they are waiting in the S&P 500 has continued to go up. Look at this sharp run right here.
Mm-hmm.
Right, this is recently. It did that in the 18 to 20 here, did that really sharp run. Now it's doing it again, and so this is getting big. These two stocks are getting so big in the weighting of S&P. And I think last week they did another chart that was based on the top 6 big tech stocks, and they were like a ridiculous number. It was like, I can't remember. Let me see if I can find top heavyweight rally.
Like 30, 40.
Top 5. Oh, this one I think I showed you. This is, yeah, I don't have the percentage, but this is in the trillion cap. Yeah, like how big it considered. Yeah, I think I showed this last time. I don't have the percentage one. I don't know where it went. But anyhow, so this is, again, the big cap seems to be leading. Oops, let me go back. Okay, this one is scary indicator. Why I say scary? Percentage of stocks outperforming index in 20-day average. So look at where we are now. So this is the lowest percentage of stocks outperforming the index. And look at when the last time we hit this low. It was at 2000 top. Right? Again, not saying we are at 2000 top, but it's scary to see a stat like that. And basically this is again saying the breadth of the market is so narrow that there's not much holding the market. If the big cap falls right now, this whole market will fall apart. Okay? And that's the scary part. Like why? Because you have to remember, right? Institutions where the most money is at the biggest weighted cap stock. And so they're selling all these other smaller cap stocks and only leaving the big ones left because they say, hey, I need to sell the other ones that I don't like first. And so they're leaving the big ones left. But if they start selling the big ones, then now you're going to start to see like even more sell off in the small cap and mid caps, right? So this is something to really pay attention to. Like it has been getting worse and worse. And like I said, the last time it was this bad was in 2000 top. Okay. So again, it's really scary. That. This one I don't really understand. I don't even want to talk about it, but I talk about it because it's the first time I've seen this. So margin debt, when someone is trading a margin, they generally follow the market. As people put in more margin, the market goes up higher. But as people start to lose money, then of course they're gonna margin continue to shrink, right?
Mm-hmm.
This is the first time that they have diverged. Okay, in the last many years, look at this. So since the bottom, the stock has been holding well, the index has been holding well, but the margin has continued to go lower. So people aren't willing to risk as much. Now, so basically the storyline, I don't know what to read of this, but the storyline is in order for the market to go up higher, people need to want to risk more using margin. And it hasn't been happening yet. Okay? So that's all I can get out of this. I don't really know what else to interpret out of this. But I just thought it was interesting. But yeah, it's really weird that it has diverged. So I'm not sure what that means. Yeah. Basically, it means that people aren't willing to take risks. And I don't know if that's a good sign. Maybe it is a good sign. I don't know. But maybe as margin continues to go up, if it does go back up, then the market can go higher. But right now, it hasn't done that. So that's the scary. That's in a way it's scary too. So I don't know. All right. So I diverged from the script. Let me come back to the script. Any other questions?
No, very good.
Okay, we'll do a quick recap. So Apple, did really well on Friday on earnings, up 5%. And also small cap did well. It came back, a lot of them. Now, the regional banks, they bounced back a lot. I'm not sure, if they even. So here's the thing. Let me just jump to one example. PAWC, right, was the one that dropped a lot. Oh, PACW. Okay, there you go. So you can see it's hard to tell because this, it has dropped so much. But Thursday it dropped so much, it dropped 50%. But then on Friday it came back up 77%. But the funny thing is, percentage-wise, yes, it has gained more because it has dropped more. And but the problem is, it's still even like as much as it has climbed back on Friday, it's not even close to where it closed on the day on Wednesday. So it closed at 642 and now it's 563. See, it's still almost $1 away, right? Now you can argue, so here's the thing, right? Whenever a stock drop, like you look at this 10-day moving average, right? And you can see here it dropped big and then it has this 1-day big bounce, and you like, it's similar to right now. We have this 1-day big bounce and you're like, oh, this must be it. This must be the bottom. And guess what? The next day, right? It fall apart again. Basically, it's going to try to fool everyone by coming back close to this 10-day. But it never come back to it, And now we're seeing the same thing again. This 10 days at this slope, and it's bouncing back, but you see, it might not come back to it. It might, continue to drop. So what I'm trying to say is, this is why, I mean, you can play for those 1-day bounce if you want, but you never know, right? But in this case, it's probably better, even if you want to play stocks like this, it's probably better to wait for it to clear the 10-day. And then you have risk management to manage the risk. So here it did that. It did that around $10. It bumped up a bit above it, stays above it for about 5-6 sessions, and that was it. This is the 21-day line, so that's where it couldn't pass above. That's why for me in the downtrend, 10 and 21 day is very important. Almost in a downtrend, it's probably better to wait for the 21-day bounce than the 10-day, because a lot of time it might come back above the 10 and then it will fall back below the 21. Like it will hit the 21 and fall back, and that's exactly what happened. So I just want to show this example because this is a classic case of a downtrend pattern, and you don't want to be trapped, right? Like even though you may not, fall here, maybe you didn't buy it, but now it caught your attention and you think you can make money off this, but now we're on another downtrend, and you don't want to get caught in this because we have no idea how far this will go. It could go to zero, right? Like so anyhow, just want to talk about this for a second because 1-day bounce is normal, but we'll see if it can maintain that, right? So job report was much higher. The reason why it didn't, I feel like the market didn't react as much, was this line right here. The prior 2 reports, they revised it down by 149,000 jobs, which is significant. So even though the number was high, just like this month, it was 253, much higher than 185. But the fact that it revised the previous 2 months down by 149,000 jobs together means that it's much weaker than it looks, right? So maybe that's why the market wasn't reacting negatively. Okay, does that make sense? Increasing weakness in the private service sector. So that's another thing they noticed in the job report, is we're starting to see private service starting to soften the labor market. Yeah. So the next thing I want to talk about, come back to the 3-day sell-off this week, is significant, right? We have distribution days on Tuesday, Wednesday, and Thursday, which means higher volume selling on the index. That's generally a bad sign when you have a group of distribution days together. Right now, like this has been the IBD pattern for the last 2 weeks almost, uptrend under pressure, which means it's like one step away from falling apart. And so we have to be very cautious. The net accumulation distribution is also not good. I think last week, surprisingly, we have Friday up, but ever since it has been pretty high in terms of distribution. And even Friday's bounce, it did come back up. You can see 161 stocks to 276 stocks being accumulated. there's a big jump there. But but net, this is the net, right? So when we take the positive minus the negative, we are still not showing much accumulation in terms of the stocks, and you can see these are grouped by sectors, and there's just not much strength. Health is still have some strength. Yeah, so not much strength in general. So that's that. If we go to what's this show here? So we look at the industry group. Biotech seems to be accumulating this week. Mining and gold, silver. So I really like gold. We'll talk more about that. Food package, building construction. We talk about that. TGRS was the one we talked about. Machinery, general industrial. This is what I was been telling you earlier. They have come up a lot. Don't know why, but the whole group is moving. REITs. I don't know how well they're doing, but they're up. Again, like construction, building, cement, those are doing well too. So which is kind of weird, like, those are infrastructure stuff. They're doing well. Very interesting. But yeah, medical products, electronic parts also doing well. Medical products, this is a very strong group right now for the health sector. Building residential, this continues to surprise. I think this is number one group in IBD right now. So all the home builders are doing really strong. Computer software database also has been kind of moving up lately. And then we see some beverages, consumer this one is a very small caps group. I don't usually pay attention to that. Retail restaurants are also doing well. So it's really weird economy right now. Like you can see, like, again, I don't know if it means anything, but the stocks are doing something. You have retails, you have beverages doing well, and then restaurants, and then you have like medical products doing well, and then you have like building stuff like construction, material, and doing well. So it's really, this is probably why the job numbers have been so strong. It's just, consumers are still buying things that they like, including going out to eat, drinking stuff, building homes, buying medical products, stuff like that. So, consumers are still spending on those things. And yeah, any questions about this? Let me go back to my script for a second. We have about 15 minutes left. We already talked about the narrow market, how narrow it is. So oil, was killed this week, and then I think it has a rebound Friday. This was a big drop. Now it didn't make a new low, so that's a good sign. Again, one day bounce back, but this is on a downtrend. This is a pretty steep downtrend right now. So pay attention. Oil usually peak around like May, June, July. So this is not a good sign for oil, right? We are at the beginning of May. I don't know. I don't have good feeling for oil. So the other thing I noticed is a lot of oil stocks, their earnings have been going down significantly. After a year of ramping up like crazy, now it's like starting to go down the profit level. I don't know why, but a lot of them actually surprised me that they're going down. So for now, I think from earnings point of view, I think they're decelerating and not good. That's oil. Let's look at US dollar. What's the US dollar index? Okay, I forgot the index. Give me. It'll come to back to me. Let me look at the 10-year yield. So we have this floor. It seems to be following the market, which is interesting. But it hasn't, like I said, this is also stuck in a trading range right now. 200 day has come up. I believe this is 200 day. It could be 50 day actually. That could be 50 day. Oh no, the red line is 50 day. The 50 day is right here, and the 200 day is the black line. Okay. yeah, so this is the start, this range here. So it's definitely very weak, and if it does go down, and that, it means that people are buying bonds and they're really afraid of the market, right? So that's something to be aware of, like yeah. We'll have to see. Like this could be like bigger recessions coming. Okay, so that's that. U.S. dollar. What was the index for that? I can't remember. But anyhow, I think it has dropped significantly. Let's see if I. Let's see, Wix here maybe. Oh, Wix are really low right now. Yeah, so a lot of people are talking about how low it is.
Yeah, and it's staying low for like
Yeah.
2-3 weeks.
So, because I don't know, like there's difference of opinion. I don't. Yeah, like May is generally a month that has high volatility. Just so you know. So some analysts are saying the next 2 weeks we might see more volatility coming in, which is not good. So they'll be aware of that. And then we have the sell in May go away story too, right? So we don't know if that's gonna happen, but it's hard. We'll see. Let me see if I can find. Yeah. Okay. Well, if I go, let me go to like Google. USD. Yeah. Here you go. So we can look at 5 days. So here you go. The US dollar was dropping big this week. So yeah. So that's something. Let me go back to my script. Okay. So this is. I'll just talk about this quickly first, and then we'll look at some stuff. Wild and loose action, many downside reversals, right? We saw TGLS was one of them. Very scary. Yeah, is there any stocks you want to look at before I look at this other ones here?
No, nothing.
Okay, so this was the stocks that I was watching this week. Like ANET was from last week, it already fall apart. Very disappointing earnings. So it's it's unfortunate. It's right now it found support at 200 day, so that's good. That's a good sign. We'll continue to watch this, but like I said, this is on a very heavy. This was the slope line, and then now this slope line has kind of like this is a very sharp slope, and I don't know if we'll break 200 day. This was the reason why I feel this is so negative is because the volume is so high. Okay, this is the highest volume in the last year. That's why I don't like it, right? It shows a lot of people getting out rather than getting in. You can see here on the weekly chart, it's the highest volume ever. So that's why, and it was actually the opposite of SMCI, right? Anyhow, if I go back, if I go use this one, it's probably faster. If I go to ANET here, it is slowing down in terms of earnings, but they're all slowing down. That's the thing that I didn't like about this report this quarter for chip. A lot of them are slowing down. So this 33 is going to slow down to 33% from it's also not good. Like that's so for me, the way I play this stock, I was like, okay, it bounced. It was good that it report good earnings, and this is good. The volume is there. This is the highest volume, so this is the opposite, the highest volume ever. But one of the you have to be careful. Sometimes when the stock top, it always have the highest volume, regardless if it's on the selling side or on the buying side. So it's not like saying, oh, this is the opposite of ANET. It has the highest buying volume means, but this is like because it has run for so long, this could be the top, right? Right now it's really strong, but like I said, so here's the problem, right? I don't like these numbers here, even though they guided higher. Okay, so that was what saved them. like the numbers were much weaker than expected. You know, it was actually like see earnings surprise down by 18%. And then if we look at the forecast, this is the forecast, right? 17% down. It's slowing down, but it was better than what market had hoped. That's why it bounced. But to me, you know, I don't want to take that risk going forward, right? So the way I played this was as it bounced up, it was around 120 or so. I start putting my trailing stop, right? Like, you know, and then it did hit it. So I got around 123, which is much lower than the current price. But hey, a win is a win.
Yeah, exactly.
Yeah, but like I said, you know, I just don't like the earnings going forward. Like, you know, I don't know if this is the last of it. But I would pay attention to this stock just because of so many people got into this stock, right? Now again, it could be the top, we don't know, because there also could be lots of people getting out right now. So it would be something to continue to pay attention. I think the guidance was really good, and also their promise of, like, again, lots of AI related stuff. You know, so they could have huge potential. This is definitely the number one stock since last year, in my opinion. You know, in terms of growth. So this is like a big uptrend. It's a very volatile stock, very hard to hold, and that's why it has this kind of move, right? But for now, I'm out, and yeah, you know, I think it's time to look for new leadership, and this could continue to be a leader, but I'm gonna keep watching it. But like I said, I don't like the numbers right now, and also the even the next quarter, even though they raise it higher, it's still not as much as I would like to see. Yeah.
So for ENET, were you able to, like, were your stop loss hit, or how did you get out
So let me go back to it.
on that day that it fell big?
Yeah. So this is I actually, you know, I think this one. Yeah, I think like I got tripped out at the open, right? I don't exactly remember what the price was. It was down. I don't remember now. Let me see here. So that day it was down 15%. I think it was close to. I think it gapped down at 8 or 9% of the open. I think. And that's where I got out. Like you know, it just tripped my stop, right? And it never came back. That's what I remember. It was like a down day the whole day. It never came back. If I look at the 15-minute chart, yeah, see, it never came back, right? Now some people like to wait and see. For me, I don't usually. For me, it's the opposite. I'll let it trip, and if it comes back, I'll watch if I want to get back in. But in this case, it never came back, and so I don't like the way it traded since. Even though it looks like it's trying to bounce back, but the bounce is very weak, and you can see the volume is diminishing, right? So the buying power is not there. Yeah. So luckily for me, yeah. So so you know, the only thing that saved me this one is that I got tripped here. This one, I got tripped twice. See, 1, 2, and then after that, I just took a small position. Like I was like, okay, this is, even though this is where I bought back, I believe this bounced about 10-day. But I bought a much smaller position, so that's why it didn't even hurt me at all. Yeah, and then like I say, all the chip stocks were just getting sold right recently, and so I was out on LSCC. Like this one, I don't remember. Like right here, yeah. See, I got tripped out right there. All my position was done. It looks like this one looks like it's trying to recover again. It's too early to tell, right? You can see it's finding resistance at the 10-day right now. But this one looks a lot better because it's been many sessions now, like 1, 2, 3, 4, 5, 6 sessions now. It's been holding up since this bottom. But I always watch for the 10-day and 21-day because the slope is the key, right? Here's the slope of 21. Here's the slope of the 10-day. It has to, because sometimes when it falls, it follows that slope. Rambus, I think it reacted well on, yeah, right here. It reacted well on earnings. Again, the earnings has dropped so much on this guy going forward. It's not on my radar anymore. But it's acting the best right now out of all the chip stocks, other than SMCI and Nvidia. Like, it's actually sitting above 10-day. Yeah. So Hubs was doing really well. I still have this. A breakout right here, really tight range. This is a phenomenal technical pattern right now. Like, it went from this tight to even tighter, and then now its breakout is probably going to consolidate around this level here. But this stock moves really slow, so just so you know. But it could be a good long-term holding, and it's still doing really well on the earnings side. There was an article I think last week about it. It's starting to incorporate a lot of AI stuff. Yeah, Melly. This one reversed on me, unfortunately. Same thing like TGLS. And I believe I got tripped out. So you see, it opened strong on earnings, and then it gapped, below recent lows, and I got tripped out. Again, like, the volume is super high, right? Like, again, it could be a shakeout and then bounce back, but again, what I'm seeing is loose action. The biggest daily trading range since like the beginning of this run. This is the biggest daily trading. Again, never a good sign. It's usually a topping sign. Wing. I think Wing. Let me see. I can't remember what happened. I know it did well originally. Yeah, it did well. I think I think I moved my stop up and it got tripped. I don't know. I can't remember. But this one is still holding on. Booking kind of fell apart a little bit. Not much, but I mean, this is in the travel sector. Yeah, it fell apart. Now it's slightly near the 10-day. Even NBO, which is the health guy, even this guy fell apart. I was surprised, so I got tripped there. Yeah, but this is still a good fundamental story. I think this. I only listen to IBD Live, but they said that they couldn't supply as much as demand, so it's not a demand issue; it's a supply issue on the obesity drugs. So I still think this is a super leader. But this is a huge cap, like $300 billion. So, but I think this is one of the best charts right now. Like, if you look at on the weekly, it's like so tight, riding the 50-day. Like, this could be a giant. Like, I don't know. It's already a giant in terms of market cap, but it could go even bigger. Again, the obesity market is so big, and we are at the beginning of if people really start taking obesity drugs and it's covered under insurance, it's gonna be a huge market, man. I don't see it slowing down. It's because people, word of mouth will continue to grow and say, oh, I'm losing, 6 months time, I'm losing 15, 20 pounds, and everyone's gonna start noticing. So that's a huge market. Like, Lilly is another stock that did well. Same thing. They have a similar drug. Look at this run. This is crazy run right now. I think some of them is gonna start consolidating. Yeah. LNTH. Yeah. So this one it wasn't out of my radar. It's just I got tripped out. I don't remember when. Like, maybe here. And then it report really good earnings and a huge update. Yeah. So I got tripped here at the top right here. And then now it has really good. So this is really strong earnings growth. Yeah, I would watch this guy. AAON. This one. This is also in the building related stuff, like heating products, AC, doing really well. It's almost like TGLS, the chart. Like, this one looks slightly stronger than TGLS. Again, really big earnings growth. Report really good earning. And then XPOF. Oh, XPOF reported on Friday, I believe. And it went down. I didn't really pay attention to the news, but it was a big drop. So I got tripped out earlier than that, and so I did. Good thing. Otherwise, I give back a lot of my gains. In this case, I didn't. INTT. This is again small cap. Looking pretty good. It report earnings. It's trying to stay above the 10-day right now. Yeah, it's in electrical miscellaneous products. So it kind of related to home building stuff. So those are the stocks this week that reported. And I would say it's pretty bad. I think the only one that did, a couple of them did well. SMCI, LNT Edge, Aeon. That's it. There's a lot more stocks going down. I think I have some notes here very quick. XLE dropping, ALB dropping. Hubs was up, Uber was up. SC, I don't know if SC stay up. Shopify, Lantis. Okay, all this we talk about. 4 also went down. Manpower went down. Yeah. David Ryan has a video. He uses buy stop, which I never use. I might think of using buy stop in the future. So basically buying when it breaks out kind of thing. And usually I watch it and then I'll buy, but sometimes maybe you're not around, you can use that. Yeah, there's some new names that I'm looking out, like IAS, one of them in computer software. TGLS, AON, Rely. I bought this. Hasn't done well yet in the financial service specialty, but it's holding on. RCL, I missed this on Friday. I think it was moving breakout. That's the Royal, that's the cruise line. ITCI is a medical stock. CAH is a medical stock. Previous computer software medical. Monster beverage drink. That one's doing well. Yeah, and then yeah, I still own ISRG, Soft, Miniso, ON. Yeah, those stocks are still holding. Gold, yeah, gold. Gold is really strong. So I know you had to go, so let's finish this one. AGI, really strong. This stock has reported really good earnings. Triple-digit growth. Forecast I think is very high too. So that's one thing about I didn't own many gold stocks earlier in the year, like the last few months, was partly because of the earnings. But now and it's funny because they started moving, and then now they're all reporting good earnings and strong guidance going forward. And so now they have actually fundamental numbers to show. 99 composite rating. Look at this, look at this run, right? So miss this run. It's still going. So this is clearly stage 2 uptrend. If inflation is here to stay for the next year, gold is gonna go a lot higher. So they're already breaking out, and I don't want to miss this. I've missed a lot already. So AGI is one of them. OR is the other one. I've been holding this for a while now. It's doing really good. I just need to find a way to add more positions. Really strong. Look at all these blue walls right here. Yeah, really strong. Argo is the one that reported this week. I started taking a small position. Again, I'm starting to build up the gold positions now. But you have to be careful because when it has really volatile swings as well. But the general trend is uptrend. Okay, so this week the volume didn't come in. I guess I bought a little bit early ahead. So I gotta watch this one. This one is probably not as strong. There's a whole bunch of them, but these are the ones that actually have positive earnings. And then there's lots of stocks in this sector. AU, Eagle, DRD, all this. Some of this even like DRD I never heard of before. This is a smaller cap, I think, but I believe it doesn't have positive earnings. But like I said, even though they all have negative earnings, but they could be improving. So that's why they're all good. But I think they all move with the sector, right? So yeah. So I just don't like look at this guy. This guy's like running wild right now. It's almost like a climax run. So I would be careful. I don't know how far more gold will go, but I just don't want to. I just have to manage my risk. That's all. Yeah. Other than that, there's a lot of newcomers. I feel I have to study more which one will lead. It's very mixed. Yeah, but I'm just not happy that the chips are not leading anymore. Because to me that is always a strong sign of a bull market. But if they're not leading, then I don't know if we're gonna have a bull market, right? Like so that's the thing to be aware of. Yeah. Anything else?
No, sounds good.
Yeah. I just want to see. Yeah, I don't think I have any more notes. That's pretty much it. So we'll see what happens. I'm gonna stay light, and I'm just gonna only take pilot position, very small position, just to test out. Because I feel like the lead, even if if this bull market continues, I feel like the leadership is gonna change. And other than gold and like say some health stocks, I don't know. Like if I look at XBI, for example, like that biotech, I just want to see what the index look like. Yeah, see, it kind of starting to build an uptrend now. So this is starting. Look, this is just starting. You can see that it's running a little bit hot right now because you can see it's like much higher above the 10-day. But it did break out on this small consolidation, and yeah, so I don't know if more biotech stocks are going to lead, but we definitely see that this week, right, from this accumulation chart. So there's lots here. Yeah, so we're starting to see ITCI is one that came into my screen, but it's starting to show leadership. So but usually when biotech lead, the chip also lead. So I don't know, man. But it seems to be not the case right now. Those are the biggest growth sector, right? It's the chip and biotech.
For gold, can we also later look at GDX and GDXJ, these two ETFs?
GDX, yeah. So GDX is probably a good way to play the gold sector. Like the chart looks identical, right, to the individual stocks. You basically pull back to the 10-day and bounce off. So it's a little bit early to buy, but I took that risk. Because when they move fast. That's what I realized about gold stocks. And so, I just put my stop here at the bottom. If I get shaken out, if it does fall below the 10-day, then I'm out, right? Yeah. But this is see, this is a cup and handle pattern. A really tight handle, super tight. And look at, so volume drying up. This is a perfect pattern, right? And then look at the volume comes in as it tries to climb out now, right? That's why everything is so perfect on technically everything is perfect in the gold area. So yeah. So what was the other one? GDXF, you said?
GDX and GDXG. So these are junior.
Oh, did I spell it wrong? GDXG.
J for Justin, or J for juice.
Okay. Yeah. Okay, so this one, it kind of broke out earlier, and then pulled back. Very similar. This one is more volatile, honestly. This is junior, but similar, right? So it broke out right here, but it fell, and then it went back in, put a handle in. So it looks identical, yeah. Okay. Yeah. So, yeah, I really like OR. This is a Canadian stock. It's just superb. Like, look at this, right? It's just, it's acting so well. To me, it's a small cap though, but it could grow fast. I don't know. The numbers are really good, I think. OR, if I look at it, it hasn't reported yet, so we gotta be cautious about this. I think 1100%. In 4 days, so we had to watch that. 1100%. So yeah, so it's gonna be like over $1, right? 11 times. So that's gonna be strong. We'll see if it beats that. I don't know. It's gonna be more about guidance, I think, for gold. That seems to be the story. It's acting like much ahead. It's looking forward. Like we'll see. But this is small cap. Gonna manage risks as it moves up. Yeah, this one I'm doing pretty well. So it's just that I have a really small position. I have to I increased this week on this one as I buying more gold stocks. But I probably will start to increase more if, because the technicals are so strong and now the fundamental story is starting to come in. And like I said, inflation is not going away. And that's why I'm worried for the market in overall, right? It's just, I don't know if the big caps, are running so strong. Oh, we haven't looked at them. Like Apple, for example, look at this. It's not that far from a new high. Look at this. So, yeah, it's almost like near the high and index not quite there yet. I'm actually surprised how fast this has come up. Microsoft. It's not near new high. Apple is definitely closer. But look, we are not far away. 310, 340. Look at that. Probably the rest are a little bit not as close. This is Google. It's still really far away from the previous high. Amazon probably still pretty far. Yeah, this is probably one of the worst. Meta. This one's halfway back. This one, even this one's doing really well. Tesla, I think it's kind of going sideways right now. Again, still under 50-day, still on a downtrend slope. This is not looking good. Like, as much as I think, they have potential, it's just not looking good, this chart.
Yeah.
Yeah, I don't know what's gonna happen. Nvidia is definitely strong. Let me see how far it is from the previous high. Yeah, pretty close, getting there. This is coming up really fast. Look at this, 286 and 340. So, I don't like the chip. Is like I said, it has really done not too well. Volume is drying up as it goes higher. That's always not a good sign. I think I don't know. I feel like the big caps are going to consolidate soon because they have gone up so much, right? So when we look at Apple, Microsoft, all those guys, they have gone up so much in the last few months. I feel like they're almost ready to consolidate, and they usually do, especially if it comes near the previous high. It might be the last big shakeout, which means they will probably build a base there. Which means if the large caps start pulling back, it's gonna make the market even worse.
Yeah.
I always forget that symbol. I just want to look at one. Okay, let me see secondary. No. Oh yeah, secondary. Oh, yes. So this guy, let's look at Nasdaq. Oh, why did here? Oh, I think I have to look at daily maybe. Yeah, there you go. Okay, so this is the advanced decline line. Look at this. I don't like this at all. Right? Look at this. It's just on the downslope, right? So basically the breadth is getting weaker and weaker. That's what it means for Nasdaq. So if I look at New York Exchange, this one's slightly better. But because at least it didn't make new low. So and then the other thing that is important is the new lows versus new highs. So here you go. So this is the green line. The pink line is 10-week moving average of new highs. And look at this. It's much higher than the highs. The blue is the new highs, which is the new highs hasn't moved, which is really bad. That's why the bull market won't start until they start to move higher. Like stocks should be making more highs, right, than lows. let me see what this one. Okay, short-term overbought. Okay, so right now it's not overbought right now, based on this indicator, because it's below the red line. So there, like we might see some little bounce here, just because it's not, just because we saw too much bearish sentiment on the individual investor survey, and we're seeing like the oscillators showing not overbought yet. Yeah. What was the other one? New York Stock Exchange. It's the same thing, just for New York Stock Exchange. This one. Okay, so this one is much tighter, the new lows and new highs. So S&P stocks, like I said, are doing much better than the tech stocks. And we see that, like, oh sorry, where's my notes here? I haven't finished compiling them, but I see, like, when I look at all this list here, are the ones that did well this week. And most of them are like, machinery. Very few tech stocks. There's a couple of tech stocks, like old names like PSN, Computer Software Enterprise, DDOG, Datadog. But yeah, I don't see many tech stock though. Yeah, there's not much. So yeah, I don't know. Nasdaq is really weak. But like I said, the only thing carrying Nasdaq is the big cap weighted techs, right? So yeah, so it seems to be still the story, but I feel like they're nearing their end of the run, at least before another big correction coming. Yeah, so I would be very cautious now, especially for like chip stocks and stuff. I just don't have a good feeling.